Welcome to another session of Business Startup Trading. Today we'll be talking about accrual and prepayment. This is presented by Accounting Lecture. Like, share, subscribe. Okay, let's talk about it. The main things we're going to consider or discuss is prepayment. We're going to define it. Then we're going to also look at the prepayment principle. Then we look at the prepayment and example. Then we move on to prepayment in practice in terms of Xero accounting software. Then we'll move on to accrual. We then define accrual. Then we move on to accrual, the principle, accrual and example, and accrual in practice in terms of Xero accounting software. And then we'll conclude. Okay, so let's first of all define what is prepayment. A prepayment may be a settle of a bill, an operating expense, or a non-operating expense that closes an account before its due date. So the main idea, all of that is just trying to say paying an expense way before it's due. That's it. All right, so all of that expression or definition is just trying to say paying an expense way before it's due. Now, when we're considering the principle of accrual or prepayment, we need to first of all consider the idea of what is due. We need to understand that fundamental principle. When an expense is due and when the expense is paid. Okay, so let's just talk about the idea. So we know that we need to consider the principle of what is due and what is paid. So let's say we were to divide expense in various quarters. So we have generally accounting here as 4 quarters. So let's say 100 is due every quarter. So 100 in quarter 1, 100 in quarter 2, 100 quarter 3, and 100 quarter 4. So that's 400 is due. Now we look at when they are paid. So 100 is paid in quarter 1, 300 is paid in quarter 2, 200 is paid in quarter 3, and 100 quarter 4. Altogether, that's 700. So what is due is 400, but what was paid is 700. And therefore, we have the principle of a prepayment of 300. So that's the idea. Now let's go a little bit deeper in terms of an example. Let's say James needs to pay for car insurance of $1,200 per annum, which is due every quarter in equal installments. So let's get the dates. So we know the first quarter is January to March. So what is due is normally at the first day in a period. Normally you pay insurance before. You don't necessarily have the service and then pay. You pay before. So what is due is 300 in 1st of April 300, 1st of July 300, and 1st of October 300. Now let's look at when they're paid. The 1st of December 300. And it is important to note that it's the 1st of December 2019, which is the previous accounting year. So it is a previous accounting year. This is when the payment occurred. So we need to actually bring that forward, but we'll talk about it a little bit later. Then it's the 1st of February, 600. And then the 1st of August, 1st of August, 500. So let's just go over. What is due is 300, 1st Jan, 1st April, 1st July, and 1st October. Altogether, that's 1,200. And what was paid is 300, 600, 500. Altogether, the aggregate of that is 1,400. Now, if we were to look at the difference between the two, we can see here that there was an overpayment of 200. Okay, so we can see that from the difference there. Now, let's look at the ledger, because the ledger actually tells the story of what was happening historically as well as what is taking place currently. Now, in terms of this ledger, we need to consider 2 ledgers. First, we need to actually consider the expense ledger. So here is the insurance expense. The next ledger we need to consider is the prepayment ledger. Because of the fact that this expense is paid way before due, so we need to have a ledger that actually captures that information as well. So the first one, we need to first of all consider the fact that there was a payment made way before the expense was due. And the payment was made the first day of the previous financial year, which is the 1st of December 2019. And that was 300. And then we had subsequent payment of 600 and 500 respectively. But we can also, once we've closed the period, we realize that what needs to be charged to the P&L, and here P&L means the actual expenses, what we need to put forward as the total expense for the period is 1,200. So therefore what is prepaid is 200. So that is reflected in the ledger. But it is also important to note that when the accounting period before closed, we had a 300 that needs to be brought forward into this accounting period because we made a payment way before the expense was due. So we closed the period with the prepaid amount there. We need to now bring forward this amount that is prepaid into this accounting period. And so therefore the 1st of Jan, the prepaid amount was 300. So we need to note that. But we took it from the prepaid account and we put it actually back into the ledger where it was actually supposed to be in the first place. But we could not have left it there because once we close the period where this is actually going to go forward to the trial balance as something that it's not necessarily going to have a major impact in the trial balance. So prepaid is normally subtracted, but we're not going to do that. We'll just actually bring forward the other side of it, which is the current asset side of it. So that's the main idea. So we move it from the actual expense ledger and then we put it in the prepaid ledger, take it from the prepaid ledger and move it back into the expense ledger when it's time to actually use it via the invoice coming into the company. All right. So, and then we see for this current period, there is 200 that is prepaid. Now let's actually go a little bit deeper in terms of the example in real life, because this is theory. Let's go into the practice. So we see here the 1st of Jan, we have the 300, which we said we brought forward from the previous accounting period. But the payments for this period, first of all, we can consider on the 1st of Feb, there's a 600. But we can also attach an invoice to the 1st as well of January of the 300 because we now have an invoice. And then we attach also another invoice to the payment made on the 1st of August. Now, obviously, these invoices will not necessarily match because the invoiced amount is slightly different from that which is paid. But we know the aggregate which is due over the 12-month period is 1,200. And what was paid is 1,400. So therefore, we know that which is prepaid is 200. So that needs to be reflected in the prepaid ledger. And we know we had 300, which we move forward in the ledger, into the main ledger in terms of the expense. And now for this ledger, what we're going to bring forward is 200. Okay, so, and that is demonstrated here. So the prepaid on the credit side of the main expense ledger and on the debit side of the prepaid ledger, because prepaid account is a debit account and expense account also is a debit account. So we need to actually reflect that information. And the prepaid information is in green. All right, so that's the main idea. Okay, now in terms of the Xero accounting software, here it's not necessarily very clear per se because we only see here it actually has prepaid and then it has the ledger. So from what I could gather based on the practice example we used, it means that this amount of 6,000 was paid way before it is due. Because if there is any mention of prepayment, it means the expense is actually paid way before it's due. So though this is saying an invoiced amount of this, it still is not necessarily reflecting the fact that the expense is actually paid way before it's due. All right. So yes, there's an invoice because it doesn't necessarily correlate invoice and then a payment, but it's actually showing that it's coming from the prepaid. So therefore, if we're putting any prepaid principal, it means that this expense was paid way before in advance. It seems as though then there's a subsequent attachment of an invoice figure or an invoice number to this payment. All right, but we can actually deduce various permutations of what actually took place. But the main principle is we have two ledgers, which is the main ledger with the expense. And here we would have an invoice of consultancy. Then the other ledger would be a prepaid ledger if the expense was paid way before. And then once we have an invoice that reflects the amount paid, we would then remove the figure from the prepaid ledger, and then we will actually put that figure back into the main expense ledger. And therefore, once we take it to the trial balance now, the real charge for the period would now be considered. I hope you like this, and this demonstrates the idea of prepaid. I hope you like this, so like, share, subscribe. Thank you.